Adobe has fallen roughly 8% after it reported its fourth quarter earnings, so the market seems like it is unimpressed with the company's results. However, Adobe is a very high quality business, and it's actually one that I have owned in the past. I have since sold the stock as I thought it was getting very expensive, but it is one that I do keep my eye on to see if it will ever offer investors another chance to buy it at a very attractive price. So in today's video, I want to go through Adobe's earnings and answer the question of if it is now offering a good price or if it is still overvalued. And if so, then at what price I would consider buying it. With that said, let's dive right into the video. And here I have a screenshot from Adobe's earnings, and this is the highlights of the earnings reports. So this says, company achieves first $5 billion revenue quarter with remaining performance obligations of over $17 billion. Adobe drove record revenue of $19.41 billion in the fiscal year 2023 and 17% year-over-year EPS growth. So it looks like Adobe's earnings per share are growing and quite substantially. Adobe's remarkable performance in fiscal year 2023 drove world-class margins and operating cash flows of $7.3 billion. So the company also generated about $7.3 billion in cash flow for the year. Then it says fourth quarter fiscal year 2023 highlights. Adobe achieved revenue of $5.05 billion in the fourth quarter of its fiscal year, which represents 12% year-over-year growth. So this means that Adobe's revenue grew 12% year-over-year and earnings grew 17% year-over-year. Moving on, it says GAAP operating income for the fourth quarter was $1.74 billion and cash flows from operations were $1.6 billion. Then at the very bottom, it says Adobe repurchased approximately 1.8 million shares on the quarter. So the company is buying back shares still. Moving on, this is the full year highlights right here. And this says that Adobe achieved record revenue of $19.4 billion for the year, which represents 10% year-over-year growth. So on a full year basis, it does look like Adobe grew its revenue by about 10%. Then for the full year, it also repurchased about 11.5 million shares. So it has been repurchasing shares for the full year now. Now, moving on to Adobe's balance sheet. Here we can see that it has cash and cash equivalents of $7.1 billion now, which is up roughly $3 billion year over year. So the company seems like it's piling up its cash right now. Total current assets are also sitting at $11 billion now, which is up $2 billion year over year. The company has total current liabilities of $8.2 billion, which I don't think is a problem at all because the company has $7 billion in cash. So almost has as much cash as current liabilities, which suggests that its balance sheet is pretty dang strong. Current liabilities are also not increasing year over year, whereas current assets are quite significantly. So the company is stacking up cash and building its assets while not really growing its liabilities, which I do think is a good thing. Now, moving on to the cash flow statement. This is my personal favorite financial statement here, and it really gives us a deeper look into how much cash the business is actually generating. So here we can see the net cash provided by operating activities or operating cash flow was that $1.6 billion. Now we can see that this is down roughly $700 million year over year from the $2.3 billion that they generated in the fourth quarter of last year. And here we can see that the biggest impact to the cash flow was this changes in other operating assets and liabilities of negative $870 million. So this large expense right here significantly lowered Adobe's fourth quarter operating cash flow. So we're going to have to take a deeper look into this here pretty soon. But moving on down the cash flow statement, we can see that the purchases of property, plant, and equipment was only $47 million on the quarter. This is also known as the company's capital expenditures, or the necessary expenditures to maintain and grow the business. And what I love about Adobe and why I think that it is such a high quality business is because it basically costs the company nothing to generate billions of dollars in cash flow. Think about it. They spent $47 million on maintaining and growing the business, whereas the company generated $1.6 billion, which also means that almost all of the operating cash flow is free cash flow for the business. Now, what they're doing with this free cash flow is they're using the majority of it to repurchase common stock. And we can see that they bought back $1 billion worth of shares in the fourth quarter. Moving on, I went through Adobe's financial statements to find out what that $870 million cost was to the company and why its operating cash flow was down year over year. And this says, our ending cash and short-term investment position exiting Q4 was $7.84 billion, and cash flows from operations in the quarter were $1.6 billion, after making a previously discussed payment in the quarter of $826 million of US federal taxes that were deferred from the second and third quarters of the year. So what this means is Adobe deferred its income taxes in the second and third quarter and put them off until the fourth quarter. And now in this quarter, they are paying all of their income taxes. This is the main reason why the operating cash flows were so much lower year over year. So in my opinion, the trailing 12 months cash flows are going to be the best metrics to use to analyze and value Adobe's business. And in the trailing 12 months, Adobe's operating cash flow now stands at $7.3 billion. This also means that the Q2 and Q3 quarters for Adobe this year were massively benefiting from deferred tax payments, which was increasing the company's operating cash flows and kind of making them look a little bit artificially high. This also means that operating cash flow has not grown since the second quarter of 2022 now. Adobe's market cap is also sitting at $266 billion now. So if we pull out our calculator, we can do 266 divided by $7.3 billion in cash flow. And this tells us that Adobe is trading for about 36.4 times operating cash flow. Now, if we head over to Stock Unlock's freeform tool, we can see that Adobe's 10-year average price to operating cash flow has been about 30, which means that Adobe is selling about 20% above its historical average price ratios, and could suggest that the stock is arguably quite expensive still. Now, back when I was purchasing Adobe, it was right here, after the stock saw a massive sell-off after it announced its Figma acquisition, and the market seemed very bearish towards the company. Back then, Adobe was selling for a price to operating cash flow of only 18, which is significantly lower than where it is currently trading today. In fact, this price ratio right here is almost exactly half of what the stock is trading for today. This also means that the large returns Adobe stock has seen over the past year has almost been entirely multiple expansion and not coming from the business's underlying profitability growth, because the price ratio expanded by 100% as well as the stock growing by about 100%. Therefore, Adobe's massive stock returns have come again from multiple expansion and not really from the underlying fundamental growth. Also, when I was buying Adobe here at 18 times operating cash flow, it was selling about 40% below its historical average of 30. So back then, I believed Adobe was incredibly cheap, and an 18 price to operating cash flow for such a high quality business is quite the steal. But now, again, I do not believe that the stock is really undervalued anymore, and I do believe that it is actually selling above fair value. But now let's head back over to Adobe's earnings results and take a look at the company's outlook for the first quarter of next year. So the company is expecting total revenue of $5.1 to $5.15 billion. This is growth of about 10% year over year. So it looks like the company is still projecting pretty decent growth rates in 2024 as well. Now, Adobe also gave us full fiscal year 2024 targets. And here we can see that total revenue is projected to be about $21.4 billion, which is right in the middle of the range right there, which is also 10% revenue growth for the full year of 2024. So it looks like Adobe is basically expecting to grow a flat 10% over the course of the entire next year. However, this also means that Adobe is selling for 36 times operating cash flow while growing its revenue at 10% annually. In my opinion, this is a very high price to pay for a business that is growing this much. For example, Fortinet is projecting similar growth rates over the next year, but it is selling for a price to operating cash flow of about 18.7, which is roughly half of the price as Adobe is selling for today. Adobe is a high quality business, but I think that its price is more than reflecting that right now, and I do not believe, again, that it is selling for a margin of safety. I also believe it is offering lower returns to its shareholders, as its free cash flow yield is now only 2.7%. This is how much cash the business can return to its shareholders versus the price that it is currently trading for, which is not a very high return rate at all. So now let's head over to Stock Unlock's discounted cash flow calculator right here and do what is called a reverse DCF to see what the market is currently pricing into Adobe stock. The reason I like to do reverse DCFs here on my channel is because, again, it shows us what the market is currently pricing into the stock, and then if what the market is currently pricing in is over optimistic, then it can suggest that the stock is overvalued right now. Whereas if what the market is pricing in is too pessimistic, then it could suggest that there is an opportunity on the stock currently. So here we can see that over the next 5 years, the market is projecting free cash flow growth of 13.3% annually. The company to buy back about 1.4% of its shares on an annual basis, and to trade at a 30 price to free cash flow, which is in line with the company's historical averages. And if Adobe can achieve all of these metrics, then the stock is selling for fair value right now and could offer a 10% compounded annual growth rate over the next 5 years. Now, personally, I think that a 13.3% annual growth rate to the company's free cash flow is on the higher end because Adobe is projecting about 10% revenue growth over the next year. So 13.3% free cash flow growth would exceed the company's revenue growth projections. And if we say that free cash flow grows in line with revenue at 10%, then the fair value for the stock is actually around $503 per share, or about 14% below where the stock is currently trading. Now, personally, I would also be more comfortable buying Adobe around a 25 price to free cash flow. I don't know if the stock is ever going to get back down to these levels, but this is where I would personally start to become interested in the stock once again. If Adobe can get back to a 25 price to free cash flow and grow its free cash flow by 10% annually, then its fair value is about $419 a share, or about 28% below where the stock is currently trading. So this, to me, is around where I would become interested in Adobe stock once again, is around that $400 to $420 range. I'm going to sit around, I'm going to be patient, and I'm going to wait for Adobe to get back down to these price ratios. And if it doesn't get back down there, then I'm going to be sitting on the sidelines. But I want more of a margin of safety before I purchase the stock again. Now, to compare Adobe to another stock that is projecting similar growth rates, again, this is Fortinet. So let's do a reverse discounted cash flow calculation on Fortinet. And right here, we can see that at its current price, it is projecting 4.3% annual free cash flow growth over the next 5 years, to buy back about 2% of its shares, which is its historical average, and to trade at a 25 price to free cash flow, which also is below the company's historical average. So basically what Fortinet is pricing in right now is only 4.3% annual free cash flow growth, which I think is much more achievable. And if the company can produce this, then it is selling for fair value today and will produce a 10% compounded annual growth rate over the next 5 years. So this is why I sold Adobe in my portfolio and why I have Fortinet in it now. I think that Fortinet is actually selling for a slight margin of safety today, and its stock price today is factoring in significantly less growth. If we bump this growth rate up even to 8%, which I personally do think is quite conservative, then the fair value of the stock is about $68 a share, or about 19% above where it is currently trading, and the compounded annual growth rate to the stock could be about 14% annually over the next 5 years. So again, I simply believe that Fortinet's lower price today is offering higher future rewards and lower risk. And I also think that it is important to compare different investment opportunities in the market to try and find the best risk reward opportunities out there. So that's what I'm trying to do here, is I'm trying to compare Adobe to another stock that I also think is high quality and is projecting the same revenue growth rates over the coming years. And this stock, in my opinion, is offering more value. So for me, I'm going to be on the sidelines for Adobe, and I'm going to be waiting to see if something similar happens and there is some more pessimism around the stock as to what happened last year in 2022. Again, if it ever does get down to a 25 price to free cash flow, then I will consider it. But until then, I'm going to be on the sidelines and I'm just going to be waiting. Unfortunately, a 25 price to free cash flow is around $400 per share for Adobe, which would be a 30% haircut to its price today. So again, I'm not optimistic that this is going to happen anytime soon, but it has happened before, so I will continue to be patient for if it ever happens again. But that is going to wrap up the video for today, everyone. And if you did enjoy this video, then please leave a like on it and consider subscribing to my channel. I do my absolute best to remain objective on my channel and find the best value opportunities out there in the market. So if that resonates with you, then again, please consider subscribing to my channel. Also, leave a comment and let me know what your thoughts are. Do you think that Adobe is a value stock today? Are you guys buying it? Are you interested in it? Or just let me know your opinions. But with that being said, thank you all again so much for watching. I truly do appreciate it, and I really hope to see you all again in my next video.